Just a moment. I hope the slides are visible, right?
Yes, ma'am.
Yeah, thank you so much. So the first unit is the introduction to your GST. What exactly this unit is going to cover and what you will be learning from this and what you are supposed to remember and understand the concept of your indirect taxation. Okay, the first part is what exactly the concept of your indirect taxation is. Okay, in that what type of tax are you going to study? Okay, so the GST part we are going to cover and why it is needed, what is the history of your GST will be covered. What is your dual GST model? What is GSTN? That is your Good Service Tax Network. Your GST Council, the role and phases of your GST Council, the constitutional provisions to enforce your indirect taxes and the GST, and your compensation cess will be covered. Okay, proceeding further, first, before what is your indirect taxation, one needs to understand that what exactly your tax is. Can anyone tell me what exactly your tax is? Obviously, it is on screen, but still, you would attempt. You can unmute yourself or you can drop a message in the chat box.
Indirect tax.
No, I just want to hear that what exactly tax is all about. Tax is basically a fees which we pay to the government, correct? So who does this fees are being paid? Who pays this fees is basically us, the individuals or the business person, correct? From the profits. And who enforces us to pay is the government, because we are paying that to the government, and government has the rule that you are supposed to pay that fees. That fees is called as your tax. Okay, so now this particular tax has been collected by the government in two forms. Which are those form? One is in the form of your direct taxation and the another is from the indirect taxation. Now what your direct taxation, this you have been learned in the previous semester. What is your direct taxation? It's basically borne by the owner. Okay, this is the tax where an individual pays when he earns it, and this tax is not at all transferable. Okay, and this tax is also called as your progressive tax, correct? And it is based upon your incomes which is earned, correct? And if we talk about your indirect taxation, then this particular tax is all about your sales part, it's all about your supplies part. And this particular tax is always transferable. Okay, like for example, the wholesale, the manufacturer is there. Okay, from manufacturer the person is selling to the wholesaler. Okay, then who will pay the tax? The wholesaler. Then after, again, a wholesaler is going to sell that particular product to your retailer. Then retailer will again sell it. So in this point, the manufacturer, the wholesaler, the retailer, and your end consumer pays the tax. Okay, it is borne every time by the some another person. Okay, now let's understand what exactly the difference between your direct tax and your indirect taxation. So, can you highlight before I proceed further? Can you just highlight any one point related to the difference between your indirect taxation and your direct taxation? Since I have given you the brief introduction of your direct tax and indirect tax.
Direct tax is directly levied on a
Yeah,
person's income, and
correct.
indirect tax is indirectly levied like on sales if you purchase
Yeah,
any goods or services.
very good, Ishika. That's nice. That's correct. So, as Ishika rightly said, it is paid directly by a person concerned, and indirect taxes is like, the actual tax bearer is someone different only. Okay, then the main important thing is your direct tax is the progressive tax and your indirect tax is your regressive tax. That means progressive means, you have seen in direct taxes we have tax slabs over there. In indirect taxes we have fixed a rate of percentage to the goods and services which is covered. Okay, so direct taxes are levied on your income and the activities which are conducted. It is paid directly by your concern. And if you look at your indirect taxation part, then it is levied on your product or your services, and it is paid by the one person which recovers the same from the other person. As I've given you the example, the wholesaler is going to take that money again from that retailer, and if wholesaler is paying the tax, okay, he is going to take that money from the retailer. The manufacturing is in the case, he is taking it from the wholesaler. Like that the cycle continues and the end consumer bears that particular expense. Further, it is a part of your income which reaches in the hands of the taxpayer. That means the person who is going to pay that particular tax, only that person is going to earn that income and he is bearable to pay that particular tax. And we talk about your indirect taxation, it is paid before only when it reaches to the taxpayer. Like the consumer is the end person right now. Okay, but in middle you have seen that manufacturer is there, the wholesaler is there, the retailer is there, all the middlemans are there. Okay, they have already paid that particular taxes. Here the collection in your direct taxes, the tax collection is quite difficult. Okay, because it has the person, the individual person only has to file that returns. Okay, may in the way of online or offline, but in indirect taxes it is way out easy because the system only catches them. So the example for your direct taxes is the income tax, the wealth tax. Okay, and for your indirect taxes we have your GST and your custom duties, also the sales tax which has been earlier, the old system of your taxes. So here you can see exactly what type of taxes are been covered in your direct taxes and your indirect taxes. So the direct taxes covers the income tax and indirect taxes is your goods and service tax and your custom duty. This two type of taxes in this semester we are going to cover. Okay, now let's take the history of the history of your GST. Okay, now this is basically a story part, if you could say. Okay, what exactly the history of your GST is. So earlier in your 2000s, okay, when the prime minister has introduced the concept and had that set up in the mind that we have to come up with a plan with the GST model for the country, because everyone in the world is using this particular type of a particular type of system, not the same I could say, but particular type of system, the similar ones. Later on in 2006, 2006, the finance minister, okay, when they were discussing the budget, okay, on that grounds, later. So the GST will be introduced in the April 2010. This was discussed during the budget part, and later it couldn't happen in 2010, but later in 2014 the amendments regarding this particular bill was introduced for the in the Lok Sabha. Later again, further in 2016, the first 101, okay, the amendment was enacted in the constitution. Then you can see here the chart. In 2016, the first GST council meeting was held where all the discussion regarding the processing part, registration part, etc. things were covered. Again in March 2017, the changes which is necessary, like compensation says what else one can get into the dual GST model, that is in the CGST, SGST, UTGST and IGST part. Later in March 2017, the act regarding your dual GST models were passed. Okay, the CGST Law Act of 2017, the IGST Act of 2017, the UTGST Act of 2017, and the SGST Act of 2017. Later in May 2017, some rules were framed regarding it. Okay, the rules are too much, so I couldn't cover this. Later in 30th June of year 2017, they have decided that all your states covering the India, okay, and except your Jammu and Kashmir, the system was, they have agreed with that, the Jammu and Kashmir will not be covering the SGST Act. But then after in 1st July 2017, your GST has actually launched. Okay, it was processed and it was been started. And later, after a week, they realized no, that the CGST and SGST Act, it should be extended to your Jammu and Kashmir also. So the Jammu and Kashmir, including your Jammu and Kashmir, all your states covers your GST Act. Okay, so if any time the launching period is mentioned, okay, when your GST was introduced, then your answer will be 1st July 2017. Okay, and later on, yes, the journey continues. Now let's understand what exactly your GST is. Okay, so GST basically, let's understand the full form. Okay, goods and service tax. Okay, when it was launched, yes, it was launched on 1st July 2017. Now this particular law has been, it says itself that it covers all your India. Okay, it covers all your India, including your Jammu and Kashmir. That is why this is also called as a single domestic indirect tax. Okay, and it is single tax on the supply of your goods and services. It is one tax, one nation. Okay, remember this code for your GST: one tax, one nation. Okay, so here in this indirect taxation, exactly how uh, your goods, which type of goods are there, what exactly your services is all will be covered in later further definitions. Okay, so it's levy on manufacturer, the sales and consumption of your goods as well as your services, not only the domestic level, it also covers your national level. And the GST is levied on your supplies of your goods and the services. So if we talk about the features, okay, the features of your GST, just a minute. Hmm. Yeah, the features of your GST. So it is one tax, one nation. Okay, so here the destination, it is also called as the, why it is called as the one tax, one nation? Because all the states are covered for your GST. No one is left in that, including our Jammu and Kashmir. That is the reason it is called as your one tax, one nation. Okay, one nation, one tax, vice versa. And further, why it is called as your destination based tax? In the previous slide only we have understood, the indirect taxation system also says that, the actual consumer, the last person only bears that particular taxes. Okay, so whenever there is sales, one has to pay that particular tax. Okay, this concept goes flowing for the value added tax also. Okay, the end consumer has to pay wherever there is a supply. Yes, you are supposed to pay that particular tax. Then coming to your value added tax. Now, if you could see mhm, this part, okay. Now, here you can see the actions which are been taken, the prices and the tax, the cost of additions and the total, and what exactly the rate of tax is, and the end is your price. Okay, let's considering this example. If a manufacture a purchase of a raw material by a manufacturer. Okay, manufacturing is purchasing a raw material. His cost is 1,000. There is no the price plus cost because he has taken it fresh. He's taking the raw materials only. So his cost was 1,000. Okay, the tax, let's say for example, it is 10%. This is just an example to understand the concept. Okay, it's 10%. Then 1,000 into 10% is how much? It's 100. So if you sum up, what is the total price? 1,000 plus 100, that means 1,100 at the second stage. Okay, when manufacturer has been completed his process, and he has converted that goods into the finished goods, and now he's selling to the wholesaler. At that time, what he is doing, that he is adding the price. Okay, what exactly he has bid, along with the cost, that is the taxes which he is going to pay, that is your 1,100. Later, he's adding his cost and additions to it, maybe profits. Okay, that is, for example, 400. Then, for him, the price which he is going to sell is like, the cost which he is going to bear is 1,500. Then, additional taxes he will be paying. Okay, taxes will be on the cost additions and not on the total amount for which he is adding his profit. It will be on the additions which he is doing. Okay, that is 400, which is 10%. So 40. Now you sum up, and what is your total price now? Correct, that is 1,540. At this third stage, this finished goods has been purchased by the trader. Okay, that is your retailer. Then now again, what is the cost for him? It is the price which the wholesaler is selling, that is 1,540. Correct. Now he is adding his own transportation cost or his profits into it, that is 350. And now he is willing to sell that in 1,890. Okay, 1,890. Now for him, you know what exactly the cost he is getting into it, that is 350. Now in 350, again the 10% taxes will be there, because in this 1,540 already the tax has been calculated. So to avoid the double taxation part, this is done. Then again the amount comes over here is 1,925. Coming to the fourth stage, okay, when the consumer ultimately buys his product from the one who is selling, that is the retailer. Okay, for him, the cost of that particular product is 1,925. Okay, including the taxes. Now that particular retailer is now in a position to get that profit or get that additions into it, whatever the cost he's going to incur, we don't know. So that is, let's say, 300. Now he has you know, given that particular product for rupees 2 triple two five. That is the cost in which he has got that particular product and his additions to it. Now the additions, we are going to calculate the taxes, that is 30, and the final product price is double two double five. In this price, we will be getting that particular product. Now, in this particular system, you might have noticed that one is that whenever there is some additions to it, okay, whenever there is some additions to it, then only the taxes on that particular amount the taxes are being charged. Correct? The next thing you might have observed in this particular system is that when there is a end part, okay, when the selling part is there, whenever there is a supply, whenever the system is getting and supply, okay, then and then only the taxes are been charged, the taxes are been levied. Okay, and here you can observe the exact system, these two systems, it has been observed over here. So coming back to the features of it, that it is and hence it is proof that this is your destination based tax and this is your value added tax. Also you might have observed the third thing, that is the continuous flow of credit. Whenever there is a purchase, there is a sales over it, and the flow continues, the taxes of it gets accumulated on the value additions which are there. Also you have observed again, it is the taxes which is applied only when there is the supply. Correct? I hope you people are there, you're active.
Yes, ma'am.
Yeah, thanks for confirming. Yeah, next part is no, it is the online compliance. Why it is online compliance, we need to understand, because in the previous system you might have observed, there were a lot of hard work, I couldn't say, a lot of paperwork formalities, and the calculation part was way out difficult, to avoid that. Also the double taxation part was also there. Even cascading was there, that is the tax on tax part was also there. So and to save that particular time, we are converting the whole system into the online system. That is the reason you might have seen everywhere, GST file karna hai. Okay. Per month, everyone is busy in filing their GST compliances. And it's very easy process. Okay. Obviously, not so easy, but yes, the process has made so easy that one can easily understand it, and one can, proceed further with the filing part. Okay, so the GSTN network is so strong that anyone could connect to the query. Anyone could solve your query. Okay, the next is, it has increased your compliance and the transparency. Yes, if you have observed the site of your GST, you might understand this. The system is way out transparent, everything is there in your system. Okay, whatever you say, when are you supposed to file the tax, what exactly the rate has been there, the electronic credit ledger has been displayed once you enter into that particular portal. Then there are some sector specific exemptions, including that healthcare, okay, the education part. Okay, so the exemptions part is also covered over here. Then if we see, as I said, you might have observed, everyone is filing their accounts, okay, periodically, month wise or quarterly, so that it becomes easy to maintain the accounts also, it becomes easy to handle also, and this is also a reason for a transparency. Okay, and this will avoid the end moment rush, to file the returns. Then the part of registration. Yes, the registration is there once you want to come into the picture of your GST if you're having that particular business. Now, the registration process, how the procedure is, what is the cancellation part, what is the threshold limit to enter into that particular GST model. This is covered in your registration. Then comes your input tax credit. What exactly your input tax credit is, that once you, now you might have observed this in this particular system. Here I was explaining you the concept of your value addition part. Okay, now let's take this example. Okay, just focus on the GST system. Let me just hide this. Uh, Leave it. Yeah. Just consider this part what I'm marking. Okay. Machine has been manufactured in Mumbai and it is sold in Pune. It's an example. Okay. So now your cost is how much? 10,000. Let's say, the GST system is charging the 5% taxes. Okay, that is your CGST and SGST. So you're getting the amount of taxes 500 each. Okay, for your CGST and your SGST. Now, the same machine is been sold from Pune to Delhi. Okay, now here the previous cost, if you have seen 10,000 plus this 1,000, it is 11,000. Correct. Now, in addition to it, whatever the transportation, profit, etc., cost has been added, and now the price of that particular machine is now how much? 25,000. Okay, now from Pune to Delhi. That means here there are two different states over here, Maharashtra and Delhi. Okay, so now since it's two different states, so IGST has been charged for 10%. So 25,000 ke upar 10% is how much?
2,500.
It's 2,500. Correct. Now, here we are not going to pay 2,500 as the tax. What we are going to pay is that because here earlier we are already paying this 1,000 tax. Correct. Now that allowances we will be getting, that is 2,500 minus this taxes, that is your CGST tax also and your SGST tax. Now the actual taxes what has been charged is how much? 1,500. Okay, so this particular CGST and SGST, the goods were purchased, the machine was purchased by the Pune person. Okay. And now he is going to sell. Now this Pune gets that benefit of your ITC, that is your input tax credit, which he is been paying earlier, that is of rupees 1,000. जो टैक्स पहले पे किया है वो वापस ना चार्ज हो. Okay, to avoid that, this system includes your ITC form. Okay, that's your input tax credit, which becomes simpler to get it. And the value over here, it avoids your double taxation system. It avoids the tax on tax process. I hope everyone has understood this. So coming back, what happened? The part of your features, the input tax credit system is also included. It's your dual structure. Okay, what exactly your dual structure is? Just a minute, I will share you the screen. Just a moment. I hope the slide is visible.
Yes, ma'am.
Yeah, thanks for confirming. Yeah, so dual GST model. Okay, now since the word itself says, there are two models, dual. Okay, so what dual is, it's about your intra and inter part. Okay, now what exactly the intra is? Okay, intra is within your states. Okay, within your state, like for example, from Mumbai to Pune, if you're selling out the goods, okay, it's called as your intra-state supplies. Now, if from Mumbai to Delhi you are selling out the goods, then it is called as your interstate supplies. Okay, in intrastate, it's basically within state. As I said, there are two, major taxes are there. That is your CGST and your SGST. Okay, CGST is your central goods and service tax. SGST is your state goods and service tax. You have also, either SGST or UTGST. That is your Union Territory Goods and Service taxes. Okay, now coming to the interstate taxes, it's as I said, from Mumbai, if you're selling out goods to the Delhi person, okay, then here comes your interstate supplies. Okay, so here you charge your IGST, that is your Integrated Goods and Service tax. Now let's uh, if the tax rate is 10%. Okay, the tax slab is, for example, 10%. When it comes to your intrastate supplies, when it comes to your intrastate supplies, then it will become 5% and 5% because they both share that particular taxes among themselves. That is 5% and 5%. And if it comes under your interstate supplies, okay, like for example, Mumbai to Delhi, then the whole 10% of the charge is been borne by that particular IGST. Borne, I mean to say, the collection part has been done by the IGST, and IGST has been charged to them. Okay, moving on further. Why this dual GST model is because India is a federal country and both your states and your centrals have the powers to levy and collect the taxes, and hence we follow our dual GST model system. Now, the earlier in the history part only we had covered, we have realized, the launching of the act was done in 2017. Okay, so whatever the model is, it permits to the law. Okay, like for example, if you're having the model of your CGST, okay, the CGST has been charged and all the rules and regulations and the points are covered into the Central Goods and Service Tax Act of 2017. If we talk about your state goods and services, okay, then the law permits to the State Goods and Services Tax Act of 2017. If we talk about your union territories goods and services, then the law will pertain to the Union Territory Goods and Services Tax Act of 2017. And if we talk about your integrated goods and services, that is your IGST, then the law will permit to the Integrated Goods and Services Tax Act of 2017. Now, this was all about the law. If we talk about the type of supplies which has been done, then you can see the CGST. Okay, the CGST has the the CGST has the power, okay, that is the within state. Okay, he's pertaining that tax within the states, and it is called as your intrastate supplies. Okay, intrastate supplies, and who collects the tax is, it is collected by your central government. Since the the GST has been collected, and I mean the law permits to the central part, and it is within the state, and it's your intrastate supplies. Now, if we talk about your SGST part, that is the state goods and supplies, the act again was the same. Further, if you see, it is again your within state part, and it's your intrastate supplies, and hence, this particular tax is your state goods and services tax, and hence it is collected by your state government. Now, if we talk about your union territory part, the act also is what? Your UTGST Act of 2017, and the supplies are the within union territories or between that particular, uh, the states. Then here, the supplies again are intrastate supplies, and the collection is been done by your central government. Okay, the central government. So in CGST also and in UTGAST also, you can observe the central government coming into the picture. And if we talk about your IGST, the integrated goods and services, where the two states come into the picture. Okay, it's outside or between it's outside the states. Okay, here the inter supplies are there, and the collection of tax has been done by the central government, but it has been shared later on between the central and the state. But the person who collects the tax is your central government only. Okay, so now in this, what you have understood is the law process. Okay, I mean, the laws which has been enacted by the models, and the supplies. So there are two types of supplies. That is your intra supplies and your inter supplies. If we ask you the question, what is intra supplies, intrastate supplies, then what will be your answer? Where the supplies are within your states, and there are two types of taxes which is covered. That is your central goods and services tax, the state goods and services tax, or your union territory goods or service goods and services tax. Correct? And if the question has been asked that what is your interstate supplies, then what will be your answer? Where the supplies are between two states. Okay, so this is the interstate supplies, and the collection over here has been done by the central government, and later on it has been shared between the state and your central part. Okay, so only one no common thing you need to remember: when there is the SGST part, the collection has been done by the state, and for the rest of the act, the collection has been done by your central government. I hope everyone has understood this. Yes, thanks, Rahul. Yeah. Now, no cascading of tax. Okay. Now, the word cascading is new for you. So, you need to understand that what exactly the cascading is. Okay. Or the cascading effect. It's nothing but simply tax on tax. Okay. Now, to understand exactly what it is, let's take an example. Okay. Now, the old system which we were doing. Okay, before your GST was launched. Okay, how the process was. Okay, the first, the case here again, where the manufacturer is going to purchase that raw materials. Okay, he's bearing that particular cost of rupees 1000. For him, the expenses is 1000. Okay, now for that particular expense, whenever there was the supply, the tax was been charged. Okay, from 1000 to I mean 1000 ke, but 10%, which is 100. So for him, the price is 1100. Okay, for the seller. Now the wholesaler, is going to purchase that particular goods now, because manufacturers converted the raw materials into the finished goods. Now the wholesaler comes into the picture, and now he purchases that particular product. Now what is the cost for him? So what the manufacturer is going to do, the manufacturer person is going to do, the cost he was bearing, that is 1100, in that he's adding his profits. So the total becomes 1500. On that, the 10% is to be charged, and now the price has become 1650. Okay, because on the profits also, including this cost also, the value was sum up, and the tax was charged on this price. Okay, where the already for rupees 1100 the tax was included in it. Okay, that is the amount 1650. Later this finished goods was been purchased by the ट्रेडर, होलसेलर से परचेस किया था ट्रेडर और रिटेलर ने. ठीक है. नाउ फॉर हिम द ट्रेडर के लिए दैट 1650 होलसेलर इज गोइंग टू कंसीडर, बिकॉज उसको जो कॉस्ट मिला था, वट एवर ही हैज गॉट दैट पिंच of that particular cost, he is going to take that money. Also he will include his profit into it, or the expenses which he is going to bear it. So now this total for that particular product has come up to 2000. In that again the taxes has been there, that is of your 10%. Okay, now the amount, I mean the price comes to the end, to the consumer who is going to purchase, that is 2200. This is not the case, the retailer was bearing it, this cost. Now the retailers are going to sell that particular product to the end consumer. For him, including this 2200, again, if you can observe this also, the taxes on 1650 in this particular amount already includes the taxes. Okay, which is there over here. Further, the consumer purchases that particular goods from that retailer with the additions of profit or the other expenses of rupees 300. The total comes to 2500. Now the addition taxes is still supposed to be paid, and the calculation part was done on this amount, that is 2500. Now this sum, the end consumer gets that particular product for rupees 2750. Now this
Ma'am, it is
27,
written, excuse me, ma'am. Ma'am,
yes.
it is written only on addition, not tax added at 10% only on addition. So why we are leaving on total?
This is the old system which I am discussing right now. Let me just
Okay.
correct this. Yeah. Huh. Now you might not be, getting confused. I hope now it's clear. It just tax on 10%. It's just mistake of copy paste. I'm so sorry. Yeah. Now,
Okay.
if you could see, it's okay. Now, if you could see, this 2750 includes the value, okay, includes the value of the taxes which are paid earlier. So the old system was having this double taxation system, that is the tax on taxes part, which has made the consumer as in burden to bear that particular taxes. Now you can observe from 1100 the price has gone up to 2750, a long way distance of 1650, the extra charges which we are bearing. Now the same system, if we see in our system, that is your GST system, okay, you could observe that the amount has come to 2255. The earlier I have discussed this GST system. I hope I need not repeat this, I guess. Okay. When I was explaining you the destination, the value addition part, I have explained you this particular GST system, how it works. Okay, it works on the additions which has been done to it. Okay, or you can say you're getting the ITC part, that is the purchase benefits of it. Now, see the amount, the double to double five, and where was the amount of rupees 27? What was the amount? 2750. So the difference, you could see it very clearly. In your old system there was the double taxation part, that is the tax on tax. To eliminate that particular part, to eliminate that cascading effect, the GST system has been introduced. Okay, you could see the difference. 2750 minus double five, that comes to approximately I guess 495, 495 rupees का फर्क आता है. Okay, again taking into the example of your old system where ITC comes into the picture. Okay, when the money machine has been manufactured okay in Mumbai, and now it is going to be sold at Pune for rupees 1000. In your old system the VAT was there. Okay, the charges was 1000 of rupees 1000. Now the same machine has been again sold from Pune to Delhi for rupees 2000, sorry, 25,000. Now in this, whatever the expenses, the addition has been added to it. From this 25,000 only, the taxes has been charged. Okay, the selling price, whatever the sales price है, उसके ऊपर taxes कर देना. That is your central rule of the old system. So 25,000 into 10%, you get 2,500 is the ultimate tax one has to pay. Okay, now in this, you might have observed already we are paying that 1000 rupees, but this system was so biased in it. We the tax on tax part was there. To eliminate that, again the GST system has come into picture to say that if the cost was 10,000 earlier, it was sold. Okay, the same state. Now you can relate that particular dual GST model. Okay, here from Mumbai to Pune, it's in the same state. So what type of supplies are there? It is your
Interesting.
intra-state supplies. When there is intra-state supplies, what we charge is your CGST
SGST
and
and
SGST.
CGST.
Both we are supposed to charge, okay, equally. So this 10% will divide into 5%. Okay, that comes to 500, 500 each. Later, this machine was sold from Pune to Delhi. Now, these are two different states. When what type of supply is this? What type of supply is this?
IGST, interstate.
IGST. It's your interstate supplies. Okay, which for now here the amount is 25,000. Again, the additions etc. were there, but here they have not disclosed it. But we have the input tax value over here in the electronic ledger. Here again, if you see the value, again it was on the supplies 25,000 cube by 10%. Okay, but we have already paid our taxes of rupees 500 and 500, which is to be given the benefit of that ITC to the consumer. Okay, and the end amount what we are supposed to collect is 1,500. That means the total cost to the consumer will be 25,000 plus 1,500, which amounts to rupees 26,500. Okay, and here if you see the value, here if you see the value, that is 25,000 plus 2,500, what comes is your 27,500. And if we talk over here in your new GST model, then the value for the end consumer comes to 26,500. So again, you can realize the difference between the old system and the new system. I hope it's clear for you till now. You can also consider this example. I would prefer that, this particular example is to be understood by you. Okay, so this will be a task for you. You can take the screenshot of this. It's self understood. Okay, the manufacturer is there, the distributor is there, the retailer is there, and the consumer is there. The cost and the GST rate has been there. Here you can observe the profit, that is the additional cost which I was talking, additional expenses or the profit, whatever it is, the sales price would come. I hope you people have taken the screenshot of it. Or you want me to, just glance this also? Thanks. Okay, I will just proceed with this. Now the manufacturer is having 1000 rupees cost, in that he needs to pay 18% GST, which amounts to rupees 18,000. Now you're the wholesaler or the distributor. For him, the cost is 1 lakh. Okay, he's adding up the profit of rupees 11,200. The sale price comes to 111,200. In that, again, the GST has been charged 8%. It amounts to 20,000, 20,016. Now retailer, the he will be collecting that particular, I mean, he is going to purchase that from the distributor. For him, the selling price was how much? 111,200. In that, he is adding his profits of rupees 24,640, the sale price, that is cost plus profit, and in that 18% GST. Consumer, what he is going to bear? Again, the retailer, in what he will be selling, that is the sale price plus your GST, which amounts to 16,0291. Now let's understand the ITC part. Whatever the purchasing is been done by the concerned person, that comes into your ITC. Now for the manufacturer, there was nothing to be done. Okay, so the ITC becomes 0. For the distributor, here he has purchased that from the manufacturer, so whatever he is going to pay becomes, becomes creditable to him, that is amounting to rupees 18,000. For the retailer, how much he is bearing? 20,000, 16. It becomes his tax credit. For the consumer, nothing comes, because he is the last end consumer, so nothing is to be, credited to him. Further, what exactly the amount one has to pay to the government? For manufacturer, what he has bared is the 18,000 amount, so 18,000 he will be paying. For distributor, what exactly he has cost? Okay, that is your output minus your input part. Again, for the retailer, the same process is there, but the consumer ultimately has to bear the whole thing. So whatever the value additions are there, the value additions is to be considered and is to be rated. Okay, so today we have covered the important highlights of the GST part. Later on, we are going to cover the other respective parts. Okay, so see you tomorrow. Till then, take care. Bye.
Okay, ma'am. Thank you. Bye.
Yeah, welcome.